It's been a little over a week since the Fed increased the Fed funds rate about 0.75%. So what's happened in the market? So remember, the Fed funds rate is the overnight rate that banks borrow money from each other. It directly affects your HELOCs, your lines of credit, car loans, things like that, but it doesn't directly impact the mortgage interest rates in the same way, right? Just because they increase it doesn't mean the mortgage interest rates long term are increasing. There's another video in the description, a link to just a more thorough explanation of the difference between the Fed funds rate and the mortgage interest rate. But what to know here, as the Fed did that, this case for the first time this year, interest rates did go up with the Fed increasing their rate. And one of the reasons it looks like that is because the market just fully digesting that inflation is a bigger problem, and the Fed moving this much so late, so quickly in a compressed time is going to cause some more problems. And mortgage bonds did not like that news. Rates shot up over 0.5% in 2 business days. We have since gained some footing and recovered some of those losses, but in the short term, as inflation persists, which is the arch enemy of bonds, you will see mortgage interest rates tick up. But long term, the Fed doing this, because it's their only weapon to fight inflation, is good for long-term mortgage interest rates. So remember a couple of things. One, you have to pay to live somewhere, right? And the good news about buying a home is that if you're renting, is that you at least get a chance to, one, refinance in a few years when rates drop again, which cyclically they do, and you get to put a little bit toward your home. There's a type of savings account, right? It's not all cost. Part of it goes to you, and you get to share in the equity. It's a leveraged investment, right? You put $50,000 in the stock market, you're going to gain 10% on the 50,000, or this year lose it, right? But even in the perfect world, gaining 10% for round numbers, which you rarely ever get, you're getting $5,000 right on the 50. But for a home, buy a $500,000 home, put 10% down, $50,000, you're getting 5% return on average of the 500,000. So you're getting $25,000 in return for the $50,000. That's 50% return, just for easy math. So remember that, and you got to pay to live somewhere. So make sure it pencils. Get back with us or with your lender and look at what the terms may look like now, and make sure that you're still making a smart decision for you or your family. But sellers are looking to sell now, right? More than they have. So there's more deals being made. So get out there and be confident. And if you're already in the home, remember that these are good times to reevaluate where you're at, look at the numbers, and use the HomeBot tool. So when you're owning a home, that HomeBot tool, if you're not on it, you need to get on it. You can see how your home would rent out, right? You can see other numbers and data analytics about your home, the value, some other great tools in there. And if you're looking for a home, it's a market tool to help you with what your realtor is sending you on the data of the right homes that fit you. You can go and do some market research on your own about, is that more of a seller's market or a buyer's market? What's the days on market in that area? And some other really good data that just dovetails with what you are getting in the portal or through the app from your realtor. So we're just a phone call away if you need us. We appreciate you. We are rooting for you wherever you're at in your homeownership journey, and we're in your corner. So we look forward to continue to working with you. Stay in the fight. And also a little book link below. I find a lot of people are stressed, including me right now. So this is a great book. Maybe share it with your friends and family, and hopefully it'll encourage you as it has me and my friends and family. Cheers.